We are keeping an eye on shares of FedEx this morning, seeing its largest post-earnings surge in more than 4 years. Results handily topped our earnings and revenue estimates, earnings per share beating the street's consensus by almost a full dollar. Ground shipments rose 25% for the quarter as the ordering from home trend continues, guys. That stock currently up almost 14%. It was trading as high as just over $163 a share. It's at $159 now. And Deirdre, it's interesting. The business-to-business portion of FedEx operation was really suffering during the period, but the business-to-consumer portion, all that ordering from home, really made up for it. You know, they were able to manage some costs thanks to reduced passenger volume on some flights. Of course, lower fuel surcharges, given what we saw happening with pricing there. And analysts are at least optimistic that some of these cost benefits they've been getting at least can continue.
Yeah, I think the story here is really about those home deliveries, right? They've seen a surge in those, but the economics aren't necessarily quite as good as B2B deliveries. So executives saying that they're now going to be attacking those residential delivery costs. And right as B2B shows signs of recovery, so perhaps some reason for optimism there. But also, it also goes to show the fact that they beat consensus shows how difficult it is for analysts and investors to actually predict what's going to come out of this earnings season. Right, Carl?
Indeed. Although I got to say, fundamentally, the commentary today on FedEx is pretty strong. Cowen 167, even though, as we talked about with Kramer, John, in the 9 a.m., no guidance, as many other companies today followed suit. And we're just going to have to get used to that, at least for the next 3 months.